A year has passed since the collapse of one of the nation's oldest and most venerable financial institutions. Although economic trouble was already brewing, the government refused to bail out Lehman. Analysts say its collapse on September 15th helped push an already troubled global economy into a recession. Vipal Monga is a senior writer for The Deal magazine in New York.
I remember really well the sense of panic that was mounting about a year ago, building up to the Lehman Brothers collapse.
Following the collapse, Congress approved $700 billion in emergency funds to bail out institutions that had invested heavily in high-risk loans. But 1 year later, Monga says a selective amnesia has begun to take hold as stability returns to Wall Street.
Some banks would argue that they didn't need the bailout money and it was forced upon them by the government. But the fact of the matter remains is that without government intervention, the banking industry would have collapsed.
Taking a message of shared responsibility directly to Wall Street, President Obama said there would be no more bank bailouts. Speaking in New York City, Mr. Obama warned against complacency.
Unfortunately, there are some in the financial industry who are misreading this moment. Instead of learning the lessons of Lehman and the crisis from which we're still recovering, they're choosing to ignore those lessons. I'm convinced they do so not just at their own peril, but at our nation's.
Despite the government's efforts to stabilize the system, the fallout continues. 15 million Americans are still out of work. Home values have dropped 15%, and stock prices are still well below last year's levels. Monga says despite growing optimism among investors, consumers are still suffering.
Banks have retreated into a more risk-averse shell, and the consumer is paying for that. I mean, higher credit card rates, foreclosure rates are going up because banks, despite the Obama administration's attempt to mitigate that, aren't being as forthcoming in giving relief to consumers.
In the streets of New York, many say they're hopeful, but some say banks are still not lending.
I think they need more regulation of the big banks and a focus on bringing them to the table with better controls on how they invest their money.
Once they start lending again and small consumers start getting money, start getting loans for businesses, once the credit unfreezes, that's when you'll see the market really kick back up. For right now, though, I feel like, confidence is the main issue.
Showing a determination to prevent a repeat of the crisis, Mr. Obama urged banks to start lending again. He also called on Congress to move quickly to approve new rules to regulate the financial industry. Arcega, VOA News.